Hi everyone, let's go through my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame impulsive scenario, where we're still looking for a wave 5 to the upside, where price is currently ranging inside a wave 4. The target for this wave 4 is usually around the lower degree wave 4, which is between this area over here. And as you can see, price is already ranging inside of this area, so it could move up for a wave 5. However, is the low already in of a wave 4? More about that on the micro time frame scenarios that I share in a second. If we look at this scenario, then for me an important level is going to be the key level at 29.5k. In case price is going to move to the downside, I prefer to see a bounce over here and then a move back to the upside for then a wave 5, as I think that candles closing over here is not too bullish for potentially a wave 5, even though the maximum target for a wave 4 is the 0.5 Fibonacci and also is in confluence with a support area that we do have between 29k and 28.8k. So if price is going to move to the downside, then this is definitely an area of interest for potentially a bounce to the upside, but preferably I would like to see price already moving to the upside after taking the low of wave 4, in case the low is not yet in of this 4 and price is still moving to the downside. If we then look at wave 5, the most common target area for wave 5 is in confluence with the 2022 range highs between 30.4k and 32.7k. Now what's interesting is that that might result in a potential swing failure pattern trade where price moves to the upside, takes the liquidity, closes below and then moves to the downside for then a potential swing failure pattern trade setup. But of course we have to wait and see how price is going to approach this area. If we then go to the micro scenarios that support this particular scenario over here, which currently, by the way, this scenario is my preferred low time frame scenario, then on the micro, the scenario I like the most is probably this scenario over here, where if we zoom in to the 15-minute time frame, I'm looking for a WXY. Actually, let's go to the 30. So over here, we then have an A, 3-wave B, and then a wave C, where wave C ends in the most common target area for a wave C, which is between the 1 and the 1.236, followed then by a wave X. Now, is wave X already in over here? Yeah, that might be possible. It is a very short wave X, but we have seen in previous videos when we were still down there in the range that a wave X can be very short, and that's true. It can be very short, but preferably a wave X usually passes the 0.382 fib time of W. And if I put that one on my chart, a fib time taken from the high of W to the low of W, and then I toggle on the 0.382, then you will see that if this is the high of X, then it is before the 0.382, which is again not impossible, it's just a little bit less common. So possibly price could make another high, find resistance, and then move to the downside in then a wave Y. Now, if that is the case and price is going to move towards the upside over here first before rejecting to the downside, then the target area for this wave Y is going to move to the upside as well, as currently the most common target area for this wave Y is pulled from the high to the low of W to the current high that we have over here, which then results in the 0.618 to the 1.236, the most common target area for wave Y, being between 29.8k and 28.9k, which again includes this low over here at 29.5k. So that's quite interesting. But if price is going to find a bit more upside for this wave X and we see something like this, then you will see that the most common target area for wave Y is shifting to the upside as well, which also means that the most common between the 0.618, the 1-to-1, and the 1.236, the most common target area for wave Y is between the 1 and the 1.236. And now this area is in confluence with the low over here, which I think is very interesting. So if a wave X can end a little bit higher, then the target area for Y moves up and is in confluence with the key level we've been talking about. So that is very, very interesting for the micro time frame scenario over here that I'd be looking for. Now, also you see two fib times on the chart, two vertical lines. The left line, which I think is important to mention because of the time of a potential wave 4, because again, on the low time frame scenario, this is a wave 4, right, that we're looking at. This fib time over here, this vertical line is comparing this wave 2 to the time of wave 4. And you can see that this wave 4, if we're in a wave 4 over here, is longer than a wave 2, which is exactly what you want to see. So that's nice, that's valid, right? The second 1-to-1 that you see over here is the time of wave 3. So this is then wave 3, we're then in a 4 and then 5. And this fib time is pulled from the low of the wave 3 to the high of the wave 3 and then you double click over here to compare the time it took to develop wave 3 with the time it takes to develop wave 4. And that's another way to estimate the length of a potential wave 4. So usually a wave 4 is at least longer than a wave 2 as a bare minimum, but it can also be longer than the wave 3 impulsive structure, which means longer than this 1-to-1, which is currently sitting on Wednesday the 28th of June, so tomorrow at 9 AM Central East European time. So that's quite interesting, which would potentially also fit with wave X again moving first towards the upside, then a wave towards the downside, ending somewhere behind this 1-to-1. So that can be quite an interesting scenario. The more bullish scenario is that the low is already in and we're going to be finding upside. So now we're going to be impulsive to the upside for that wave 5. Now this is an alternative scenario that I have at the moment, and I will explain why. First of all, we then have over here a WXY. I don't like to call this a W or an ABC with then over here the W ending over here, and the main reason is that if this is counted as an ABC or potentially a WXY, but as an ABC, as this looks to be potentially a diagonal, then if this is an ABC, this wave C over here is incredibly short. It doesn't even reach the minimum target for a wave C, which is the 0.618. And if I put that on my chart, you will see over here, again, this is then pulled from the high to the low of the diagonal to the high of then B over here. If this is then C, you want to usually see wave C going all the way to the 1-to-1 and the 1.236, but as you can see, it didn't even hit the 0.618. So I'm not looking at this to be an ABC. Could be potentially a WX and then a Y, but then you have to go to the 3-minute, 5-minute time frame, and it's low time frame counting, which is not really something I like to do. I like to stick on the 15-minute as a minimum. But yeah, this like I currently put it either on the left one, where this is then a 3-wave structure to the downside, because a wave W is a 3-wave structure. So either this is then a 3-wave structure to the downside over here inside this move, or we're going to be looking for a WXY, not an ABC, but a WXY to the downside, something like this. But then also for a WXY, the minimum target is usually the 0.618, which hasn't been hit. So that's something to take into account. Of course, if you take another pivot, then hey, it is hit, but yeah, it's not nice. That's why this is also an alternative scenario at the moment. So this wave W, a bit of a question mark, right? Then we have wave X, and then this wave Y is also a bit of a question mark. Now, this wave Y, if you look at the wide fib, the 0.618 has been hit, pulled from the high of X to the low of W over here to the high of this wide X, which is a target for a wave Y. So that works. But then this wave W is very long, even wave X is longer, and then we have wave Y. Now one can argue, you put wave X over here, and then you have maybe some sort of a zigzag structure in this wave W, 3-wave in X, and then maybe an expanding flat type of move in this wave Y. That would work for then eventually the 0.618 also moving to the downside a little bit, but it is hit nonetheless. So then this has to be the low of wave Y, and you now want to see the beginnings of a bigger wave 5 to the upside. So you want to see an impulse, right? A 5-wave move towards the upside. That's going to be what you're going to be looking for. If we look at the blue fibs, this is the most common target area for a wave Y, which is pulled from the high of W to the low of W that I then put over here to the high of this wave X. And as you can see, it's also respected. So at least that works, but mainly because of this W over here, and time-wise, this wave Y is going to be short even if you put X over here. This wave Y is still very short compared to W as well. It feels a little bit like an alternative, but definitely not impossible. If we compare wave Y with wave W quickly for time, with putting wave X on top here, and we toggle on the 0.382 as usually a minimum, at least it passed the 0.382. It ended right on top of like the 0.5. And if we move this fib time to potentially the high of X over here, you will see that the 382 has not yet been hit. So yeah, interesting scenario, but I want to definitely see an impulsive structure to give this correction more of a probability. It did, however, bounce right on top of the target box that we had, which was between 29.8k and 30k, which was nice, right? We have a weekly naked point of control. We had a daily couple of lows as well. So that is quite interesting. We did have important support over here. So if this is going to result in an impulsive structure where you want to see a 5-wave move to the upside, 3 waves down, and then a continuation, then the low could be in. But for me, this at the moment not the highest probability. It's an alternative scenario. Only if we get an impulsive structure over here will the probabilities for this scenario increase. If we then zoom out again by a little bit and we go to the 1 hour time frame, then another scenario, which is an alternative at the moment, is that this is a wave 1 that is already finished. So we have a 5-wave structure that's finished, followed then by now a wave 2 to the downside. Now, a minimum target, usually, for a wave 2 is the 382 fib, currently sitting at 28.7k, which is a rare target for a wave 2, just like the 886 is also a rare target, with the most common targets being the 0.5 to the 0.786 between 27.9k and 26k, which means that price still has quite a way to go to the downside. Now, very rarely, very rarely, this wave 2 bounced on the 0.236. So if I toggle on the 0.236, you will see that also price did not yet hit the 0.236, pulled from the low to the high of this wave 1, right? That's the fibs that you're seeing on the chart right now. Now, the 0.236 again is extremely rare. So preferably price moves at least to the 382, which is rare. So very rare, common targets. That's what we're looking for, and this again is rare. So preferably price then moving to the downside, but as it stands, it's already taken a while and price is not really taking big steps to the downside, right? Which is the main reason this is an alternative scenario. And the only way you could potentially find more downside, like below the 236, is if this is somehow a 5-wave move to the downside. So I at least want to talk about this scenario where we're then looking for some sort of a diagonal, which is a 5-wave move, right? A 1, 2, 3, 4, 5, which can either be a 5, 3, 5, 3, 5 scenario, or all waves are 3-wave structures. Now, in this particular scenario, what is interesting is I already explained that I don't like this to be an ABC because this wave C is simply too short for me. I don't like it. So then this wave 1 has to end over here. But then we create a problem because in a diagonal, if this is a 5-wave move, then you want to see wave 2 and wave 4 being zigzags. You want to see zigzags, which is a 5, 3, 5-wave move where this is then an A, B, C, where the low of B is not taking the low of the beginning of A. But as you can see, this wick over here took the low of wave 1, which is not what you want to see if you're looking for a wave 2 in a diagonal for a zigzag, unless this is an ABC 3-wave structure, but this C is too short, right? So I don't like it. So we have a big problem going on over here between the wave 1 and the wave 2. Now, if we then continue looking at wave 1 being over here, and you pull a trend-based fib extension from the high of 1 to the low of 1 to the high of 2, then you will see that wave 3 is now longer than wave 1, which is not allowed. So the 1-to-1 that you see on the chart is the length of wave 1 compared to 3. And you can see that wave 3 wicked below the 1-to-1, meaning wave 3 is then longer than wave 1, which is not allowed in a leading contracting diagonal, I should say, but a expanding diagonal is very rare. And an expanding diagonal is, of course, the trend lines going away from one another with the waves becoming longer and longer. So 3 is longer than 1 and 5 is longer than 3, but that's extremely rare, so not something to look for at the moment. So this is also, again, another reason this scenario it just doesn't feel likely at the moment, right? For then eventually a 4 and a 5. But yeah, I already explained the probabilities for this scenario, for me, in my opinion, are not that high. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.